welcome to Tradespoon. My name is Lakarpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. All right, Bill, Mark, John, Tim. All right, let's start. Welcome to Tradespoon. My name is Lakarpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable where we talk about current market conditions and answer any questions you might have. This is my brief bio for those of you who are new. Tim, Bill, welcome back. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do on my own risk tolerance level for general education information purposes only. All right. Before we jump into trading psychology, let's look at the current market and see if anything has changed. So we had unemployment data today. Interest rates are up, right? Because inflation, unemployment data came in better than expected. More jobs being created, wages stable. The revised April data. So that means Fed has dual mandate of keeping the employment healthy and price stability. And crude oil has been near 100 since beginning of March. So it's March, April, May. Now we're going to June. We have inflation data next week, and market participants are pricing in at least one rate hike this year, which 180-degree turn from rate cuts about months or 2 months ago. So that's quite giving an excuse for the market to pull back, right? So we kind of seen that. For now, I mean, VIX is at 16, so there's not a lot of anxiety in the market. I mean, semiconductors were leading the market; they are pulling back. QQQ was leading the market; it's pulling back. Small caps leading the market; they are pulling back. Consumer staples are actually up, right? People are rotating into oversold safety asset classes like healthcare and consumer staples, and that's moving, making a nice move to the upside. Copper prices pulled back sharply. China pulled back. Emerging market heavily concentrated, and AI names pulled back. Google is stable. It already dropped to 50-day moving average. And Amazon dropped. So we've seen Google and Amazon at least already at 50-day moving average. I mean, Meta has been underperforming, right? That's sitting at 50-day moving average, actually. And NVIDIA, right? So Magnificent Seven, or they're not Magnificent Seven anymore, but the $1 trillion club, $1 trillion valuations club, did pull back close to 50-day moving average already. So now the question is, will QQQ pull back to the 50-day moving average? Because we're pretty far away from 50-day moving average in QQQ. I guess too early to tell. We'll see. One area of concern again is the Bitcoin. That's been a good indication of when the risk off, right? And Bitcoin has already been down for quite a while, and it's breaching 60,000 levels. So there's a lot of kind of panic and illiquidity in the Bitcoin. And the next level, if the 60,000 doesn't hold, which is the 26 low, right? If that level doesn't hold, the next level is 50,000, 50,000, and then probably 30,000. So that's a pretty sharp pullback, and that could be indication that there's not a lot of appetite for risk, not just for Bitcoin, but also among the AI names. Because the uncertainty is in the live trading room. I was saying that the uncertainty is in what's going to happen during the next FOMC meeting, right? Nobody knows, right? We have a new Fed chair, and he might say, listen, we're going to look at the different data points. We're going to run different formulas and calculations of in order to make a decision on the rate cuts. And if there's a rate cut policy mistake, right, which people are concerned about, right, that he's going to say, listen, inflation is out of control, the situation in the Middle East is not changing, we're going to do rate hikes, then there will be a deeper pullback. If he's kind of preserved that this is a transitory oil shock, we're diversified away from Middle East and we're a net exporter, we don't see any issues in the United States, consumer is okay paying $6 for gas at the pump, then maybe market is just, pullback is going to be shallow. So market doesn't like uncertainty, and that's the current reaction. Crude oil is actually down today. So you have that divergence, right? Usually market is up, crude oil is down. Crude oil is down, market is up. Today, crude oil is down. I mean, that correlation is kind of broke down for at least a little bit. We'll see if this is a short term or more of a long term. Bill, 1.25 down now, 60% cash. Yeah, 60% in cash. I think right now you want to be in the position where, QQQ historically, when companies get so far away from the 50-day moving average, it's hard to determine where the stop level was. I mean, I can say, okay, 20-day moving average, I can say 700, but nobody can give you any 100% certainty that we're not going to get to 50-day or even, 100-day moving average, right? If this uncertainty persists after 3-5, after the mess. I mean, you do have that IPO, right? $1 trillion. I mean, historically, when you have that exuberance in the market, right, in terms of IPOs, this, crazy evaluations of Anthropic and SpaceX, at some point, that's usually an indication of the top of the market, right? I'm not in that camp, right? I think this is not 1999. The AI, we're not selling T-shirts online, even though it is resembling, like back then we were building a lot of the internet infrastructure for the internet, and the internet is going to take over. But initially people were just selling, T-shirts and coffee mugs on the internet, right? Books, right? They were selling books. AI, I think, we're not selling books with the AI. AI is actually making companies a lot more efficient. They're making workers more efficient. But job participation actually increased, right? So I think we're still in a bull market. I don't think we're in 1999-2000 scenario where it's an internet bubble about to burst, right? I'm in the camp that this is a healthy digestion period, but I don't know if we're going to reach 700 or we're going to reach 660. But I want to be in position. If we reach 700, I'm going to add, and if we reach 680, 660, I'm going to add more, right? If this digestion period is going to continue into June, and even if there is a Fed mistake of saying that we're going to raise rates. All of these situations are possible, so you do want to have cash. Bill just said he's 60% cash. I'm probably 40% in cash on my, Tradespoon Yellow Tunnel account. Probably even more, probably close to 60 now. So if it keeps pulling back, okay, then I'm going to start deploying cash. So that is important exercise, right? If Spiders is down 2% or QQQ is down 1% and you down, 2% or 4%, well, Spiders could, 50-day moving average is 710. That's 35-point drop. That's 5%, right? Nobody can tell you that Spiders will not drop 5% between now and end of June. Totally possible. Then you want to make sure that you have cash and you can, you start thinking about buying. Any questions? Okay. Small caps are down, but stable, right? Small caps are almost at all-time high. They're not participating. They're down 2%, but still not falling off the cliff on 20-day moving average. Obviously, semiconductors the most overbought, QQQ most overbought, so they're down. Value stocks in general are actually almost flat, right? So value stocks are all-time high. So you know that this is just more of a healthy rotation into the value stocks, whether it's healthcare or banks or industrials. And people are trimming their profits on some of the technology stocks. Well, I think that's normal, and that's kind of being reflected in the VIX. VIX is not above 20, right? There's no panic in the market. VIX is at 16. Any questions? So I would keep an eye on interest rates, right? Obviously, there is uncertainty in the market. Market does not like uncertainty. Nobody knows what Wash is going to do on June 16th. And this pullback, that rotation could continue for the next couple of weeks, right? It could continue longer. Nobody knows, but you want to be prepared for this. How do you prepare? Well, the only way to be prepared is to have, more cash than you usually have. And the only way to be prepared is make sure that if your position does drop 2.5%, then you get out of the position and review your overall position. We just finished live trading room, so this is Tradespoon Elite Circle. You guys are welcome to sign up for it. You can see all of my positions, and Broadcom, this is an earnings power trader that will expire today. That's a losing position now that semiconductors pull back. I do have software. I have one position in software, and I have one position in oil, right? Option position. So my concentration in the speculative option trades that expire on June 18th is very little. If all of your positions are in AI expire on June 18th, I would at least think about it and either trim your exposure or roll them into July or probably July, right? But trim your concentration of options positions, right? Because it's very hard to say if by June 18th we're going to have a rebound or not. Your opinion about putting into a fund like Ron Barron's that are already heavily invested in pre-IPO shares of SpaceX. I mean, a fund, I don't participate in Ron Barron pre-IPO shares that have high exposure to SpaceX. I mean, if this is a long-term investment, right, and you have, I think SpaceX, I think Anthropic will do fine. Doesn't mean they're not going to drop, 30, 40%. No, it doesn't mean that. So if you're a long-term investor and you have a long-term horizon, I think SpaceX and Anthropic are strong companies and they'll do well over a long period of time. But when SpaceX goes public, that doesn't mean if the interest rates, especially if there's a Fed policy mistake, and interest go up, it's not, I don't think anybody can justify SpaceX to be a $2 trillion company, right? They're not generating trillions they're generating billions of dollars of revenue, but their revenue is not going to grow exponentially, right? It's not like they're going to be 30 billion. Like Anthropic, they went from, I forgot what the number is, 20 billion in Q1, and then it went to 40 billion in Q2. They could go to 80 billion in Q3. That story, I believe, and that hype can continue until it's going to be hard for them to beat that line, right? At some point, AI adoption is going to end. But SpaceX, I mean, nobody knows when they're going to push the servers into the space and how many, they're not going to grow exponentially, right? They're not going to, I doubt they're even going to grow, that slope of their revenue growth is going to be, very, non-linear. I think it's going to be slightly flat. So at some point, you will have 30 to 40% pullback. If you're concerned about that, I would trim. If you're not concerned about this, just say, Vlad, I don't care if it's 30, 40%, I'm just going to buy more. Then that's fine. Tim, let me know if that makes sense. All right. Meanwhile, obviously, semiconductor, SpaceX, Anthropics of the world, their valuations are going to be pulling back because of this, stock. When semiconductors, when the indexes double, right? When they double in less than a year, right? Or, that's considered to be a bubble territory, right? That doesn't mean we're going back to 350 today, but it means that you want to be careful in these AI exposure. You don't want to have your entire portfolio in AI, highly correlated names to AI, right? I mean, you can have 5% of your names to AI, 10%, but anything above 10%, then you have to realize that you could have these 30, 40% pullbacks in very short period of time, right? This could be the beginning of 30% pullback. I don't know if it is, but it could be, right? So it's very important to concentrate on things that are within your control, right? What's within your control? If you look at our stock forecast toolbox, some of our main models, we have notes, right? I propose you, doesn't matter what your opinion about Anthropic or SpaceX, you have 4 active positions, maximum loss of 2.5%, especially when it comes to options, because options have expiration. And if you trade in monthly or weekly options, you don't know what's going to happen by the end of June or by end of next week. We could be at all-time high by Friday, right? We have PPI and CPI data next week, right? Guess what? If the CPI is going to come in harder than everybody anticipates, which is totally possible, right? Then the sell-off is going to accelerate, right? Because then there's much higher probability of rate hikes, right? So this, next data point is Wednesday, right? Wednesday. And until Wednesday, you're probably going to have uncertainty in the market. So that's something to keep an eye on. I mean, if it is better than expected, you're going to have a rebound, right? So that's something to keep in mind. Keep in mind. Thank you, Tim. VIX, no panic. Majority of the stocks, no panic. Majority of the stocks, like value stocks, VTV, I don't know, 3,000 names, they're close to all-time high, right? And you can see sharp rally in XLP. You see a sharp rally yesterday in some of the, Citigroups of the world, Morgan Stanleys of the world. Caterpillar is doing well. So there are names outside of AI that, are catching a bid, which is good. So for now, it's healthy rotation, no panic. But silver is down 7%. This means that people are concerned about that Fed is going to make a policy mistake and start doing rate hikes, or at least an indication that they're thinking about the rate. They don't have to do a rate hike, but if they say that the probability of rate hike is going to be much higher now by end of the year, and that this oil shock is not transitory but more of a longer term in nature, well, market is not going to like that. All right, how do we help on Tradespoon? We have tools, right? So we have stock forecast toolbox. I mean, you can look at spiders, right? Like I have a position IGV right now. IGV is an uptrend. If I look at the 10-day prediction, IGV is an uptrend. If I look at the 6 months longer term prediction for IGV, it's actually still in downtrend, right? So I have a long-term perspective and short-term, right? If you look at the past couple years, since October of last year, software has been in the bear market. But short-term, it's catching up bid and it's growing, right? And you can do this on IGV, you can do it on spiders, you can do it on NVIDIA, right? Any popular stocks that you have, you can type in NVIDIA and actually see, okay, NVIDIA is in downtrend, right? So that's something to keep an eye on. So that's the tool. You can put your list of stocks that you're considering, right? You can. It's not a good message. Stock forecast toolbox. That's interesting. But you could put it in your portfolio and watch the stocks. I'm not sure why it's loading, some bug or some instability. But you could, every day we publish signals that we think can outperform the market based on different models. So you can look at today, you can look at yesterday. So today Dover looks like an uptrend, right? So you can see some of the companies, outside of AI catching a bit. Merck is nice rebound. So healthcare names. Cisco, right? Cisco has been in strong uptrend. Right? That's in the AI name, but not directly, but more of an infrastructure play. But nonetheless, it is an AI, and on the pullback, maybe it makes sense to buy. Any questions? Okay. That's active trader. You can also look at the weekly trader. Weekly Power Trader gets published every week. So on every Sunday, you get a list of stocks. For this week, let's see what the market predicts. Microsoft, so it sees Microsoft in uptrend. Microsoft, not a great week. It did pull back from the highs, but I still think the trend is intact. Amphenol, again, semiconductors, electronics manufacturing, that's in uptrend. Also not a great week because of the pullback. Honeywell, see how's Honeywell doing this week. In the past, Honeywell actually also pulled back. Aerospace and defense is under pressure. But okay, so these are the stocks that model publishes every week, right? Some of them I trade, some of them I don't. So if you actually want to see what I trade, you can, go to Elite Orders, right? And you actually will see that, I sold EEM in the past 7 days. So some of them are stock positions, some of them are option position, right? So today and yesterday, Broadcom, right? I did the Broadcom earnings power trade. It didn't work out. I did add to Amazon. I trimmed Amazon and I added to Amazon. So it's a combination of both stock and option trades. Combination of stock and option trades. You can find them under Elite Circle. What else is interesting? So stock forecast, this is a long-term, short-term predictions for the momentum and the range. Active trader, weekly trader, monthly trader, these are the signals that you can subscribe for, right? In your tools membership, you can subscribe for these signals. And then Elite Circle is actually where you see all of my trades, stock and option trades. Robo Investor, you can just see stock trades if you're more interested in just stock ideas. Premium Portfolio, one trade a week, published on Sunday. Usually I do it as an option spread. You can do multi-legged. So this week was the IGV trade, right? IGV trade. But you can buy an option spread. I did option spread that expires next week. You can buy a single call or you can just buy a stock. But that's Premium Portfolio, Robo Investor, and Elite. So these are the portfolios that I manage, both combination of stock and options, which you can look at over. And then you have Stock Forecast Toolbox and Active Trader, Weekly Trader. We do have free information, so there is a lot of, we have a YouTube channel, you have a market newsletter where newsletters gets published along with the weekly signal, weekly trade ideas. So I encourage you to add info@tradespoon.com that you get our emails, so they don't end up in spam. There's a pretty large, extensive learning center. We've been doing this for the past 14 years. There's a large library of videos and PDF files, guides that you also use to learn how to trade. Any questions? All right, if there are no questions, then, let's sum it up. I'm going to wrap it up in the next couple of minutes, but let's look at this week. Retail, no new signal in retail. Oil, no new signal. Metals and miners, we had a good week. It reversed most of the gains today, so no new signal. Consumer discretionary hasn't gone anywhere. Healthcare is in uptrend, so it's a very strong week for the healthcare. Utilities are under pressure. Consumer staples are still under pressure. XLK, basically, no new signal. It reversed most of the gains from last week, basically. Industrials, almost at all-time high. Financials, doing better, but no new signals. Energy, same thing, no new signals. Materials, no new signals. Home builders, no new signal. Biotech, no new signal. Value stocks, breaking out. So majority, if you look at VTV or equal weighted S&P, very strong week. People are taking less risk and rotating into, dividend-paying stocks. So VTV, REITs, no new signals. Volatility, no new signals. QQQ gave up all the gains from last week, basically. Spiders give up all the gains from last week. Junk bonds, no new signals, kind of trading sideways. Regional banks, insurance, same thing. Semiconductors basically gave up all of the gains from last week. Airlines, no new signal. Telecommunication, no new signal, gave up all the gains from last week. Transportation, right? So your railroads are doing well and continue to grind high, which is a good signal, right? That means probability of recession is actually diminishing, right? That we are in a recession, the recession is going higher. All right, that's all I have for today. Just a reminder, there's no closing bell next week. There's no strategy roundtable next week. I will have a brief session in morning bell. You guys are awesome. Thank you very much. Enjoy your weekend, and I will see you guys Monday morning. Thank you. Thank you, Bill. I appreciate it. Thank you.